Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Cybersecurity Awareness Month, which takes place every October and now in its 19th year, is a collaboration between government and private industry to raise awareness about digital security and empower everyone to protect their personal data from digital forms of crime. Joining me for this segment, we have Anton, Katz, co-founder and CEO of Talos, which powers digital asset trading strategies globally to discuss mitigating cyber threats on digital asset platforms. Anton, it's great to have you with us. Welcome to Trade Talks.
Thank you very much for having me.
Let's start with where Talos fits in the digital asset ecosystem and how it enables wide-scale crypto adoption.
Yeah, so Talus provides institutions with the ability to trade crypto assets. Our background actually is from capital markets, and we provided similar capabilities for institutions in FX and futures, in treasuries, in all other asset classes. So today, our job is really to make sure that we provide a familiar infrastructure for institutions to interact with digital assets, crypto specifically, providing them with this end-to-end trading capability. We worry about the pre-trade, the post-trade, and the trade itself, of course. Basically, effectively allowing institutions to interact with the crypto using the same kind of tools, the same kind of mindset and the workflows that they use in capital markets. That's our job.
What are some of the general risks that are stifling institutional adoption?
Yeah, so generally speaking, institutional adoption is definitely progressing. Because of the kind of services that we provide to the ecosystem, we have a really nice vantage point into that. We've seen a lot of progress over the past 4 years, but we've seen an acceleration over the past year, especially on the service provider layer, which are the institutions that provide other institutions the ability to interact with the underlying asset. But generally, when we're talking about risks, there's probably a little bit of the old, a little bit of the new, right? The old risks are kind of like some of the more familiar risks to capital markets. Do I have the best price discovery? Do I have the best capability around best execution, right? Can I manage really coherently the entire trade life cycle through this interaction with an asset class? But also, and I think a little bit more relevant to the topic here is that there's also new sets of risks that are introduced in digital assets, especially around, custody of assets and transfer of assets, right? It's really interesting to see how an asset that can move instantaneously, almost instantaneously, interacts with a professional environment when we're used to be talking in T+0, T+1, T+2. So quite a lot of interesting risks there around how do you properly store it? How do you control the actual movement of funds? Mistakes like obviously hacks, but also things like sending assets to the wrong address are still something that is discussed in crypto. And, for full-blown large-scale institutional adoption, those kind of matters need to be buttoned up. The good thing is that we have seen quite a lot of progress there, and there's quite a lot of providers that are providing capabilities that allow institutions to really start, thinking about the asset class rather than start thinking about the fundamental risks that exist there.
More specific to Cybersecurity Awareness Month, what are some of the ways to mitigate cybersecurity risks, and what are some of the institutional options that you're seeing start to emerge to enable this?
Yeah, so in general, when you combine cybersecurity risks along with an asset that can move from here to the other side of the globe and stay there, that's a killer combination, right? It's exactly the kind of stuff that worries. And generally speaking, when you're thinking about institutional risk and mitigating those risks, every security system is as strong as its weakest link, right? So it starts at an individual level, and honestly, if I can't stress it enough, if you're still not using two-factor authentication, you really should be. But then, of course, as we're talking about how institutions store their assets, then you really need to exercise your ability to understand who are the best custodians there, who are the best providers of custody technology is, right? And then on top of that, setting up the right type of operational efficiency. So setting up the right policies in terms of movement of funds, in terms of, how many people in your organization have the control, how many people you need to have, what is the minimum of people in the organization that needs to have control. So quite a lot of interesting tools there, but really what we've seen over the past 4 years is emergence of, these two flavors, right? Direct custody, which is the custodians that provide the technology to institutions to actually, custody the assets themselves, and also custodians themselves. Providing institutions the ability to effectively outsource custody. So a lot of these solutions are in the market right now and being used pretty heavily by our clients.
All right, Anton, to wrap up here, what's your longer term outlook on continued digital asset adoption?
Yeah, I mean, obviously very, very bullish. We work with the largest institutions around the globe that are either, trading or gearing up to trade, or even more so now in every jurisdiction, we're seeing quite a lot of service providers. Those are banks and custodians and brokers that are providing their clients with the capabilities to trade digital assets or crypto in particular. But, one of the interesting things that you're asking about digital assets, we do see those kind of like a little bit as separate, right? Crypto itself is almost like a use case on top of digital assets. Crypto has been evolving and starting to evolve into a material asset class. It still trades about 1% of what we trade on a daily volume with FX, right? FX trades around 6.6 trillion. Digital crypto trades around 60 billion. And so there's quite a lot of room to grow and to mature. But at the same time, digital assets, I feel, have a lot more potential to really, really dominate the evolution of financial markets. Being on the other side, our entire team, and myself included, we've built a lot of the technology behind traditional markets. And I can tell you unequivocally that what we see right now with the kind of abstraction layers, the technology that is behind digital assets, I strongly feel that we are going to see other asset classes migrate to digital assets rails. And so as a result, yeah, I remain very, very bullish and excited to see what's in store for us for the next couple of years.
Yeah, it really is interesting coming from the traditional capital market space and seeing how it evolves into the digital asset space. Anton, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much for having me.